Thanks for clicking. We had another interesting week in China's real estate crisis this week with Evergrande, the developer that started the wave of defaults in China.
You're welcome.
Receiving a stark delisting warning from the Hong Kong Stock Exchange. We also received more data on China's real estate market. We spoke last week about China's home sales starting to inch their way upwards in the wake of the lockdowns, but this week we saw that prices continued to decline. Finally, it looks like China's property crisis is starting to spread to other sectors, with Chinese property conglomerate Fosun seeing a major rout in its bonds after Moody's raised concerns that it wouldn't have enough liquidity to cover its obligations by the end of the year. So what I want to do today is check in with Evergrande, look at China's real estate data, and then take a look at what we've always worried about, that China's real estate crisis would spread to other sectors and the broader financial system as a whole.
Do I dare ask if we're going to see contagion?
Moody's reported this week that they have issued 91 downgrades for Chinese property developers over the past 9 months, compared to just 56 for similar companies over the past 10 years. So obviously this crisis is starting to heat up, and as we're about to see, it's also continuing to spread. We'll have updates out on China's real estate crisis every Friday on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into Evergrande. We received news this week that the Hong Kong Stock Exchange had issued a delisting warning to Evergrande, as the distressed developer has still failed to provide audited books or account for $2 billion in money that was seized a few months ago.
Drama and threats.
Evergrande stopped trading on the Hong Kong Stock Exchange in late March, shortly before it failed to produce the audited books as mandated by China, and it failed to account for nearly $2 billion that was seized, as Evergrande didn't know who or when that $2 billion was pledged. Under the exchange's rules, a company can be delisted, kicked off the exchange, if it remains suspended for over 18 months. Although Evergrande isn't set to be delisted until September of 2023, the end of the 18 months, they can move up that timeline if need be. And Evergrande is required to produce those audited books and to account for that $2 billion in missing dollars before they can resume trading on the Hong Kong Stock Exchange. Being delisted from the exchange would obviously cause major problems for Evergrande, as it's already having, obviously, major difficulties in borrowing money. So this would severely limit its ability to raise funds going forward, and obviously is not a great sign for the entire market as a whole that the Hong Kong Exchange is warning that it can delist the company even quicker if it doesn't produce its audited books.
Don't make me do this.
And this comes at a time when China's real estate market does not need any more bad news. Data came out this week that the real estate prices in China have fallen for the 9th month in a row, down 0.17% from the previous month. And it's not just the past 9 months either. Chinese real estate prices are only up 0.1% over the past 12 months in the top 70 cities. And a large reason for this lack of sales when Chinese property developers need the money the most is a lack of confidence in the industry, stemming both from the real estate crisis, from the mass defaults that hit China over the past 6-8 months or so, but also from the lockdowns, which didn't do much to help already shaken Chinese consumer confidence in the real estate market.
Oh, so now this is my fault.
So despite all the stimulus measures that China, that Beijing, and the People's Bank of China have been rolling out to try to get consumer spending, to try to induce them back into the real estate market, consumers obviously are still not having any part of it, and that's not a great sign moving forward for a real estate industry that needs all the money it can get. And time might be very well running out for China to turn around its real estate sector. One of the biggest worries from the beginning of the Evergrande crisis was that China would not be able to contain this simply A, to just Evergrande, or B, to the financial sector as a whole, and it's looking more and more like they are not able to contain this crisis. Indeed, despite all of Beijing's efforts, Chinese conglomerate Fosun was put under a review for a downgrade from Moody's this week over concerns the property crisis could spread to Fosun's property subsidiaries. Moody's noted that liquidity, cash, is very low at the company level, and Fosun might not have enough liquidity on hand to service its debts for the next 12 months. The move by Moody's resulted in a major sell-off of Fosun's bonds, which were down 21% over investor worries the crisis is spreading.
Well, we've seen this really dramatic repricing of risk across Fosun's dollar bonds. They're at record lows, below 50 cents on the dollar for a lot of the curve. And essentially, it's worries over liquidity.
And it looks like it very well might be spreading, as concerns over contagion are starting to mount, and doubts are rising that China will be able to effectively contain this Evergrande crisis to the real estate sector.
We are seeing now other industrial names selling off on the back of concerns about Fosun, and it really is an indicator that we are moving into a very different phase of stress for China's financial markets beyond just the crisis that began in the property sector, as we see that ripple through effect on industrials, on the construction center, and well beyond.
So as we've said all along, the COVID lockdowns offered a brief reprieve from the real estate crisis that was still ongoing in China. We didn't see a whole lot of developments from the real estate market over the past few months, but now that the lockdowns, at least temporarily, are over, we're starting to see investors get even more worried about China's ability to effectively contain this crisis to the real estate sector. In fact, it's looking like China can't contain this to the real estate sector, and it is starting to spread to other sectors, other conglomerates, and investors are getting even more worried that this will not be contained. And as we've always said, anything that happens in China, the world's second largest economy, is going to reverberate back to Canada, back to the United States, and hit us here. As such, we'll continue to have updates out on this real estate crisis on this channel every Friday. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.